out, I will welcome everyone and thank you for your participation. And actually the second sessional on biodiversity this morning. As you've just heard, we are recording, but that is just going to be for the panel presentations, which are coming up first, and we'll stop the recording during the roundtables. And hope everyone would speak free and easily through those tables, because they are just due to help us sort of explore forward. And one thing we very much recognize is this is the first steps within this, but sort of really appreciative of everyone's sort of time, efforts and energy to help us move forward. Biodiversity was one of my themes to champion as the sort of sustainability board chair. So absolutely delighted to be here, to be hosting the panel, and so appreciative of all the effort that has gone into it. Indeed, for this sessional, with a sort of 20 authors covering 5 papers, which over the last 40 days and nights has been reviewed by 20 different reviewers. We're now putting on 2 sessionals in a series within a sort of 20 or so event fortnight. We're going to have 14 virtual tables with over 200 registered attendees. And I'm fairly sure that most, if not all of those factors actually break records for sessionals for the IFOAs. So, it's my real thanks to give, starting with those authors and the reviewers, with a particular shout out to Joe Kennedy, our portfolio lead on research for the Sustainability Board, who did such an exceptional job coordinating and shepherding these together, ready for today. As well as my thanks to the sort of panelists who go on to introduce the sessions, the chairs and the scribes for the roundtables, and also the IFOA events team. There have been over 60 people have been involved bringing this together today. So that, I think, is a huge reflection and testament to the engagement of the subjects around the profession and the desire to move forward. I will shortly sort of run through in terms of the schedule today, but essentially we will have a short session from each of the panelists introducing the papers. We will then go to the round tables at 9:30, coming back at around 10:10 to do sort of feedback, a very sort of quick loop around, and looking to close as close as we can manage to 10:30. So to talk about the sort of papers today, we'll start with the importance of biodiversity risks by Aled Jones. Aled is the Biodiversity Working Party Chair. He's the inaugural director of the Global Sustainability Institute at the Anglican Ruskin. Can someone just give me a new set of teeth for this morning? Anglia Ruskin University. He works on climate change and biodiversity and how they relate to the opportunity and risk within finance. In 2017, he was made an honorary fellow of the IFOA. Georgie Benden will talk about zoonotic diseases. She's an actuary in insurance and investment team within the government actuaries department. She covers a number of different areas, including going over a different page on my sheet, including disaster risk financing in developing countries, insurance arrangements within the public sector, and contingent liabilities across governments. Then as a slight change, I'm sorry to say that Rebecca's not been taken ill, so Alex Darsley has kindly agreed to step in and talk about the natural capital and actuarial perspective. Alex is a pensions actuary with 15 years experience in the industry. He currently works for the pensions regulator, following previous spells in consultancy for Hymans Robertson and Willis Towers Watson. We will then turn to Introduction to Biodiversity Valuation Tools by Ryan Allison. Ryan is EY's UK Sustainable Finance Actuarial Lead and is a member of the IFOA Working Party. Biodiversity Working Party, he had supported a number of UK insurers with their climate risk strategy, climate modelling, and wider ESG implementation. And then to close for the panel will be on biodiversity and justice by Bhavin Barada. Bhavin is a qualified life insurance actuary and currently works at the PRA in its life insurance division. Bhavin has previously worked at consultancy and with various insurers. So with that, and following the panel, we will then turn to the roundtables. Really encourage and appreciative of everyone's efforts to sort of contribute to those. I'm very much hoping that by the magic of Zoom, there will be a click and will disappear into the right spaces. There should be a chair and a scribe for each of your rooms, but should the sort of magical connections not quite work, please do appoint one if they're not already there, and you'll have seen the questions within your pack. We'll come back into the room around 10:10 to do the feedback, and either sort of the chair or the scribe just asks to sort of nominate one of each other to give that back, and it's probably just about a 2-minute feedback each before we close. So with that, and with no further ado, I will pass over to Alex to talk about the importance of biodiversity risks.
That's me. Do we have the slides?
Do you want to start? And I think Lucy's going to bring them up on the screen.
Brilliant. Thanks, Lucy. So yes, what we're going to start with is the importance of biodiversity risk and thinking about this for actuaries. So the first paper is a sort of introduction to some of the key issues around biodiversity risk. So if we can have the first slide. One of the things we've been looking at is what sort of scale does this risk present for finance. This is from the World Economic Forum, their Global Risks Outlook, and you can see the sort of top 4 risks there in the top right-hand quadrant in terms of impact and likelihood are climate action failure, infectious diseases, biodiversity loss, and human environmental damage. So within biodiversity, we're kind of talking about environmental damage, biodiversity loss, and you see one of the papers is talking about zoonotic disease. So we're in this session talking about 3 of those top 4 risks, both in terms of impact and likelihood. When we're talking about biodiversity risk, what we talk about in terms of the physical risk, what's at risk of being lost. If you look at the next slide, then it's a sort of 1 in 4 species are at risk of extinction. And this is called a crisis of biodiversity loss. So we're facing another global extinction event. Exactly what this means for society and the economy is less clear. So obviously it'll have significant and has had significant impact on the rates of biodiversity around the world. But how you translate that into either economic or financial risk, that's now the study of lots of research, and that's where we're trying to help the Institute to understand how this risk translates into something for actuaries. The next slide, please. So from a Global Futures report, so WWF, we're looking at the potential risk of the loss of some ecosystem services could have on the overall economy. So this is different scenarios that they were looking at in terms of managing biodiversity. So the one on the left is a business as usual risk split into different regional impacts. So these are high income regions, 48 countries in there, down to low income regions in the red. And you can sort of see the significant impact that a degradation of biodiversity can have on ecosystems. So losing between 0.5% and 1.5% of global GDP over the next 30 or so years. So it's a substantial risk. And then how you translate that down into individual physical risks or a transition risk if we start managing biodiversity, or liability risks. These are all risks that we should be concerned about as actuaries. Do we have the next slide, please? So then we start to break this down, and what could that mean for different business practices within the actuary profession? And there are things around insurance, pensions, mortality and investment. Those are the main areas we've been considering. Everything from the increased severity of natural disasters through to mortality risks and morbidity risks being affected by either access to natural capital, natural world, or air pollution or zoonotic disease risk. So there's all these different sorts of risks that could come out of biodiversity, and trying to understand those pathways are important. Next slide, please. So that's why the Working Party was formed, and we created these 5 papers. So the first one, the importance of biodiversity risk, tries to summarise some of these risks and how they may translate into economic and or financial risk. And then the 4 papers that you'll hear about in a bit more detail look at how they link into particular areas of substantial risk. Obviously, zoonotic disease is front of mind at the moment. But then natural capital as a concept, what does that mean? How are people using it? What sort of tools are there for valuation or for actuaries to use to bring it into decision making? And then a final paper on biodiversity and justice, and thinking about that from the perspective of actuaries who have both a long-term, short-term and various different stakeholders to consider. So that's sort of introduction to biodiversity, and then we'll have a deep dive into the various different issues. So the first one, I'll hand over to Georgie on zoonotic diseases.
Thanks, Aled. So hi everyone, my name's Georgie Bednam. I'm an actuary at the Government Actuaries Department. And I've worked alongside Amy Shields, Emita Luhano and Andrew Kirk to produce the paper on the link between zoonotic disease and biodiversity loss. So if we move to the next slide. So to start with, I thought it'd be helpful to talk about what is a zoonotic disease. So zoonotic diseases or zoonoses are diseases that have been transmitted from an animal source to humans. And well-known modern zoonotic diseases include diseases such as HIV, influenza, coronavirus, Ebola and rabies. And the emergence of a zoonotic disease is by nature unpredictable. That's demonstrated by the emergences of zoonotic diseases from a wide variety of animal sources and different geographical locations, as we've witnessed from recent cases. So it is hard to predict where the next disease could come from. And the emergences of infectious diseases in humans are increasing, with over 70% of these estimated to be zoonotic. The risk of pandemics is increasing rapidly, with more than 5 new diseases emerging in people every year. And any one of these has the potential to spread and become the next pandemic. And as we've seen with COVID-19, once a new zoonotic disease emerges, the impact can be devastating. There can be an increase in mortality. So one example is the Nipah virus that was closely linked to pig farming, where a variant emerged with a mortality rate upwards of 75%. But there are also, as we've seen with COVID, wider effects on society. So disruption to the economy, but also disruption to health services. And as we've seen, the impact of COVID-19 has been felt across the globe, and that's at the moment amounting to around $11.5 trillion of monetary and fiscal support that's been needed to help with recovery. So if we move on to the next slide. So for zoonotic diseases, the spread of these can be attributed to a variety of different causes. These are things such as climate change, habitat loss, animal agriculture, and exploitation of natural resources. And I think for all of these, human activity emerges as one of the key underlying drivers. Almost half of the zoonotic diseases that have emerged since 1940 have resulted from change in land use, change in agricultural or food production practices, or from wildlife hunting. And the drivers of zoonotic diseases are the same drivers that are causing and accelerating biodiversity loss, as can be summarised in the diagram on this slide. And these drivers are inextricably linked. So, for example, climate change and habitat loss can force or facilitate the migration of animal populations, and this leads to biodiversity loss, but also it facilitates the spread of any foreign diseases, and this cause and effect loop amplifies and makes things worse. But there's also some evidence that biodiversity loss itself facilitates the spread of zoonotic diseases, with a theory that a greater biodiversity of species can potentially reduce the transmission of disease, as there are several species that the disease has to pass through to reach humans. I think this really highlights the delicate balance of the natural world and the huge impact human activity is having. Indeed, another threat to human health, antimicrobial drug resistance, is interlinked in here as well as animal agriculture, and its involvement in potential antimicrobial drug resistance is believed to aid the evolution of zoonotic pathogens as well. So if we move to the final slide. So as mentioned at the beginning of this presentation, the risk of pandemics is increasing rapidly. So unfortunately, it is a case of when and not if the next pandemic is coming. This is coupled by increased human activity, such as the rising demand for meat, that is leading to an unsustainable global system of intensive production that threatens biodiversity as well. I think COVID has really shone a light on this, and there are various initiatives emerging, such as the Wildlife Conservation 20 and the Preventing Pandemics at the Source groups, that aim to prevent future pandemics through building more of a sustainable relationship between human consumption and wildlife conservation. But in addition, the COVID-19 pandemic has highlighted the effect of zoonotic diseases on the global economy. And the Dasgupta review highlights that the associated cost of actually monitoring and preventing zoonotic disease spillover over a 10-year period represents just 2% of the estimated cost of COVID-19. Therefore, the hope is that industry efforts to create new metrics to measure economic growth that factor in natural assets, as we'll hear a lot more about in the other talks that are coming up today, could eventually help to reverse this trend of biodiversity loss, but therefore also potentially and hopefully decrease the prevalence of zoonotic diseases as well. So I'll now hand over to Alex, who's going to talk about natural capital.
Thanks very much, Georgie. Good morning, everyone. So we've heard a bit about the problem of biodiversity loss. One possible solution is to focus more on the services that nature provides us and think of nature a bit more like an asset. And that's the essence of the natural capital idea, which is the topic that my group's looked at. Me together with Matthew Ahern, Alex Martin, Travis Elsom and Rebecca Craddock-Taylor. So our group looked at the concept of natural capital, the uses, the drawbacks, and the paper includes some case studies. We didn't really go into how you do the calculations, and you'll hear more about that from the next speaker. So to start off with a definition, natural capital is the stock of renewable and non-renewable natural resources that combine to yield a flow of benefits to people. So natural capital would include soil, air, water, and all living things, so all plants, animals, and biodiversity. And if we go on to the next slide, the first step of a natural capital approach is understanding the breadth of different services that nature provides. They're called ecosystem services, and they're normally split into these four groups. So you have provisioning, are the material goods we get from nature, such as timber. Regulating are the services that keep things in balance, such as the carbon cycle and trees sequestering carbon. Supporting services are those processes that are essential to support all the other services, such as pollination. And then cultural services are the non-material benefits that people get from nature, such as enjoyment and recreation. Now note, these are all about what nature does to people, and we'll come back to that thought in a second. So if we could go to the next slide, please. That a natural capital approach is any exercise or any analysis that where you properly account for the value of nature and those services. There's a huge range of uses for this. There's no kind of one model natural capital approach. For example, if you're running a project or want to do development, you can improve your cost-benefit analysis to allow for the impacts and dependencies on nature. That would be a natural capital approach. Another way of doing it is to measure the stock of natural capital in a particular area at a given time, and that's what's known as natural capital accounting approach. One example of that is a study that estimated the value of the Earth's natural capital at £125 trillion. And that kind of figure can seem a bit meaningless, but that exercise becomes more valuable when it's repeated year on year, because that means as long as you do it consistently, it allows you to track the state of natural capital or the state of nature over time. Final example that we include in our paper is an example of an investable asset called reef credits. And this is an initiative in Australia centered around the Great Barrier Reef. And this is something a bit like carbon offset credits. So companies are able to purchase reef credits to offset their environmental footprint. And the money from that is earmarked and has to be used by the local farmers in the area to improve the quality of water flowing into the sea, and that in turn benefits the reef. So that's an example of an investable asset. Now, despite the huge range of uses, and I think potentially good uses and exciting uses, the concept is quite controversial and not everyone agrees with it. So can we go to the next slide, please? Some people find it just distasteful, thinking of nature in a monetary way, and some people dislike the way it's all about what nature does for humans, as if that's the only important thing. And those are completely valid criticisms, and I think the point that valuation is partial is the most important limitation to bear in mind. And what do I mean by that? It's however good the data we get and however complete we value those services of nature, any valuation will still only include the things that give use to humans, and that is not all of the value of nature, because it has an intrinsic worth, as a value because it exists in its own right. That kind of limitation leads to these risks. So a user of a natural capital assessment might see a figure and maybe focus on the headline figure and miss those nuances and misunderstand that as being the true value, or something that can be traded off or bought against something that is also measured at that value. So if I can finish on the next slide. With those, I think, exciting benefits and uses, but also limitations, it could be a really important area for actuaries to work in the future. And this will be a good thing to discuss in the roundtable. So on the one hand, there's thinking about the traditional areas and how nature services affect insurance and pensions and so on. But I think there's also a broader question of, outside of the traditional areas, any people doing a natural capital approach, I think, can benefit from the actuarial skill set, because you've got complex models, you need lots of assumptions, you need to communicate the uncertainty in results and explain the limitations. So for those reasons, I think it's an excellent topic for actuaries to get familiar with, and I hope this talk has been a good, useful introduction. So thank you, and I'll pass on to Ryan.
Thanks, Alex. Good morning, everybody. My name is Ryan Allison. I'm an actuary at EY, and I worked with Pallavi Komwar, Samiksha Sindhu, Lisa Yu, and Larissa Naidu to develop a paper titled Introduction to Biodiversity Valuation Tools. So thank you very much for their hard work on the paper. And what I'd like to do is to start with 3 quotes, which I think set the scene quite nicely for this particular paper. The first is from Professor Dasgupta, who you'll have heard of before in a couple of the other presentations, the author of the Economics of Biodiversity for the UK government. We must understand and accept that we are embedded within nature, not external to it. And this is really saying that everything we do in financial services Every pound that we invest, every pound that we lend has a real world impact. The second quote from Mark Carney: climate considerations must be embedded in every financial decision for a truly green recovery. So to me, this is saying it's not just the job of the investment team or the risk team or even the actuarial team to think about biodiversity risk, but actually climate considerations such as biodiversity risk need to be taken into account into every single financial decision that we make for us to effectively be able to have an effective and positive real world impact. And finally, I think my favourite quote from Lord Kelvin, who's a famous Scottish mathematician: I often say that when you can measure what you are speaking about and express it in numbers, you know something about it. But when you cannot express it in numbers, your knowledge is of a meagre and unsatisfactory kind. And I think this is really the famous mantra of what gets measured gets managed. So of course, with some of the caveats that Alex has just described on whether indeed this is something that we should be measuring. So you may be thinking there's all sorts of tools and metrics that may well exist. So where on earth did we start when producing this paper? We decided to begin with DEFRA, which is the Department for Environment, Food and Rural Affairs, the UK government, to look into a short list of tools that they had already compiled. It's a total of 15 tools in the Enabling a Natural Capital Approach guidance document that they prepared, and they are tools that are used outside of the actuarial world. So, for example, used by local councils, forestry management agencies, various other quasi-government bodies. And we asked ourselves, are these tools applicable to the actuarial profession, either in their current form or in some sort of modified form? Could we use this as a solid foundation from which to start from? So we jumped into this particular paper and had a look at these tools, had a play around with them to see if indeed they could be useful for our profession. And we found that actually 5 of them in particular jumped out as those that were quite effective and quite useful, particularly with respect to investment teams. So investment teams of insurers and pension funds in particular may find some of these tools quite useful when making direct investment decisions in, for example, infrastructure assets. So what I'd like to do next is just give you a brief snapshot of one of those tools to give you a little indicator of that. So if we could jump on to the next slide, please. Thank you. So this tool was developed by the University of Exeter as part of the Southwest Partnership for Environment and Economic Prosperity. Quite a mouthful, that particular title. And what it does is it pulls together a map-based and web-based view of various ecosystem services. So this is going back to what Alex described, the various different ecosystem services that exists. This tries to attribute a value in some shape or form on each of those services. And what you can then do is you can zoom into this map, you can identify at a sort of granular postcode level what value has been attributed to different land areas, and therefore come up with a view as to whether certain land use changes or ways in which you are impacting that land through the infrastructure asset you're investing in, for example, how that might impact or benefit the value of that area. There are, of course, as with all tools, limitations. So limitation of this particular tool, the NEVO tool, is that it is limited to just England and Wales. It is also just a partial valuation. So linking back to Alex's description, it doesn't capture the intrinsic value of biodiversity. So it very much centers on the ecosystem service component and trying to attribute a value to the human element. And so these limitations that I mentioned, they're quite similar across the other tools in the shortlist. So we've come up with a bit of a plan of action in terms of what comes next. We think that the next steps are to try to identify what the specific actuarial use cases are for each of these tools and try to develop those a bit further. Understand whether these tools are indeed just limited to direct investments and investment teams, or if there's a way in which it can be used more extensively. and also whether there are non-UK equivalents of these tools that we can use. So there will be some of the points that we'll explore as part of the roundtable discussions. And with that, I'll pass it over to Bhavin.
Thanks, Ryan. So as well as considering whether we should value nature and how we should value nature, both of which were covered earlier by the other panelists, we also need to consider from whose perspective are we valuing nature, as biodiversity risks and justice are highly interconnected. So I worked with Jessica Fifield, Simon Sutcliffe and Aled Jones in producing a paper on biodiversity and justice. So justice must be brought into consideration regarding the use of natural resources and biodiversity loss to recognise different views of stakeholders. The paper mentions three things to consider when recognising the different views of stakeholders. Firstly, there may be varying views from different stakeholders of the same ecosystem. We give the example in the paper of the value of a specific tree, which is likely to be higher for someone who sits under it every weekend to read a book than to someone who's never visited the site. Secondly, different types of value may be placed on the same ecosystem, for example, physical value, cultural value. And thirdly, sometimes it can be difficult to identify the stakeholders in the first place. There can be additional issues to consider, such as ownership of land. So when considering justice, it's important to define what we mean by justice. In our paper, we propose 4 concepts that need to be considered to achieve fair outcomes. So these are recognition of inequality and discrimination, participation in the decision-making process of all those who are affected, distribution of resources, and nature must be considered as a participant. So along with these definitions, we also need to consider that achieving the UN Sustainable Development Goals is a widely accepted standard as a minimum level of global justice. So if we can go on to the next slide, please. So our paper presents 4 case studies covering 4 different ecosystems of forests, fishing, farming, and water. For each ecosystem, we drew out some examples of biodiversity loss and the actions taken to try to recover or reduce the impact of that loss. For all the case studies, there were a variety of intra and intergenerational justice issues, which we link back to our definitions of justice. For example, in the farming case study, we investigated a payment for ecosystem services, which incentivized the conversion of cropland into cropland on highland slopes into forest and grassland by providing farmers with cash and grain subsidies to better manage flood risk further downstream. However, the subsidies were not distributed fairly across all groups of farmers. So if we can move on to the next slide, please. So the case studies demonstrate examples of how biodiversity loss and justice can have implications for traditional actuarial work. The paper outlines a number of these implications. For example, staying on the farming case study, this shows that agricultural practices can have a direct impact on natural catastrophes, such as floods further downstream, which may impact insurance companies. Also, the intensification of agriculture has led to increased use of chemicals, such as pesticides, which can impact human health over longer timeframes. Furthermore, certain groups of people may be more exposed to these health risks than others, which could lead to further unjust outcomes. We can move on to the next slide, please. So in addition to the implications for actuarial work, the paper identifies that the actuarial skill set itself can be hugely useful in developing financial solutions to biodiversity loss and considering justice. Actuaries have been performing data analysis, long-term modeling, and considering the equitable allocation of resources for a range of stakeholders of different generations, albeit in traditional financial settings. For example, in with-profit bonus distributions or the valuation of pension schemes. Actuaries already work with frameworks that bring fairness into decision-making, such as treating customers fairly and the principles and practices of financial management. So as a profession, we have a unique skill set, and the paper proposes that not only do we need to consider biodiversity and justice risks in our actual work, but that the actual skill set can open up opportunities for actuaries to contribute further in the field of biodiversity and justice risks. So that's all from me. I'll hand back over to Nick to organise the breakouts. Thanks.
Thank you very much. Thank you, Barb, and thank you for all the panelists. And I think that just highlights, just in an introductory sense, the topic of biodiversity and, some of the initial dimensions, which is clearly such a huge topic. So at this point, we move on to the roundtables. I will ask Nikki if she can just stop the recording at this point, and we just move into the individual tables. As mentioned before, there should be a chair and scribe, but if there's not, please do elect one amongst yourselves